Welcome traders to the Polaris Trading Group PTG University Indicator Review. Today's indicator we'll look at is the Open Range Strategy Indicator. This indicator identifies a key open range price with targets. The Open Range Strategy Indicator plots the 5-minute opening range rotation median price, which acts as the session's anchor price. Early trading sentiment is measured with trade strategies formulated and implemented by Mr. Big. This indicator also plots price targets with uncanny accuracy. If you plan to trade alongside institutional traders, this is a worthy tool to use. And it's also part of our core balance chart bundle. Let's take a look at the charts and see what it looks like. Okay, we're taking a look at a 5-minute day session S&P E-mini. And the reason why we use a day session is that we want to see the open range gaps from the close of the prior session. And what you'll see here is you'll see the 5-minute high, 5-minute low, and the 5-minute median point, which is also just referred to as the average or midpoint, plotted on each session's first 5-minute candle. Now this zone, this main price, acts as a anchor point for the day. When the price gaps as it did here, it was a bullish gap, and also price held the 5-minute opening range average, and this set the tone for prices to go much higher over the course of the session. And as you can see here as well, the price pulled back here to the 5-minute high, found support right in here, and then ultimately continued to rally up during the session. Also here in the following session, we had another gap. Prices again held the 5-minute opening range average right in here, and then once again use that as a key benchmark price for the day, or an anchor point for continued gains. Let's take a look at a couple other examples. Okay, and next set of examples here, we're going to take a look at prices gapped up, as you can see here, and most people would view that as a bullish development. But what happened? Price ultimately sold off a little bit later in the day. 5-minute high-low midpoint was established. All right, and as you can see here, prices were not really able on this bounce back up to get back above the 5-minute key anchor point and trade above it. As a result, sellers came in and actually responded to that 5-minute average and then actually sold prices back down, ultimately pushing prices lower beyond the prior close, and then as you can see, prices accelerated. So although prices gapped up, prices could not get back above and stay above that 5-minute average. We have an opening range strategy that we use in our membership and on a day-to-day basis that utilizes this 5-minute opening range sequence rotation in a very important way. So as a member, you will learn how to use the 5-minute opening range strategy and actually create some very good trade opportunities using this key anchor point for the day. So what our indicator simply does is it measures that first 5-minute high-low midpoint, but it's the education that we provide in how to use and under what context does the 5-minute average is telling us whether prices should go higher or should go lower given the overall context. Let's take a quick another example with some price targets. Okay, on this example, one of the options that the trader has with this opening range rotation indicator is to add price targets, symmetrical price targets. So very simply, you get that 5-minute high-low midpoint established, and then we have some symmetrical price targets. So the distance of the 5-minute average to the high measured from the high out brings us to an opening range upper target at 1846 in this instance, and then followed by a target up here at the 1847.50. So price getting above that opening range high targeted an extension up to about the 1847.50s, whereby sellers came in, responded, and then rotated price back down. You can also see here that prices, when they rotated back down through the opening range, okay, found support at or near that low. It did extend a little bit beyond that, rotated back up, and this was a range type day. Very good oscillations. There was actually some very nice trades we had throughout the course of that session, and as the market closed, pretty much in balance right where the market opened. So this is a opening range rotation strategy indicator that we use, and it is a core part of our trading methodology here at Polaris Trading Group, and it's certainly one that if you're not familiar with already, an opening range strategy, that you should become familiar with, and the tools that we use, and particularly how to use these tools. All right, good trading, everybody.